China's conducting an LBO of the world through the Eurodollar system, backstopped by the Fed and protected by the U.S. military, while they build up their own military at the same time.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart, here with a special presentation for you. Geopolitical risk has been relatively subdued as an investment theme over the past decade, but it's now moving quickly to the forefront, as today's headlines about Ukraine, Russia, and NATO make clear. But there's another, much more quiet and poorly understood threat that I want to bring to your attention today. It was raised by macro analyst Luke Gromen at last month's Wealthion conference, where he explained that China is exploiting the US dollar system to lock up a growing number of key global resources. In Gromen's words, China is conducting an LBO of the world using the Eurodollar system, backstopped by the Federal Reserve and protected by the US military. They've basically hacked the game that America has forced everyone to play, and they're bending the rules to their interest. As Luke says, nobody's a bigger fan of the US dollar system than China, except perhaps for a few politicians and CEOs getting rich off of the current scheme. To understand this in more detail, as well as the serious consequences in store, let's listen to this part of Luke's presentation from our recent conference. You've talked about how China right now is exploiting the Eurodollar system, and I'm going to put up here a map that you had shared, as well as your comment here. As long as you ignore geopolitical implications, China is using the Eurodollar system to buy up control of the world's finite assets, such as ports, stocks, etc. Once they've used the Eurodollar system to control enough of the physical world, they can impose their will through shortages, etc. So can you dive into this a little bit more? Is this something that we are likely to see more of going forward here?
Short answer is yes.
Less cooperation and potentially becoming more competitive for key natural resources.
Yeah, oh, absolutely. I think there's going to be more competition. I think prior to COVID, there was a very small cadre of people in and around Washington, primarily centered around the U.S. military and certain intelligence agencies that were seeing what China was doing, which is basically using the dollar system and the Eurodollar system against itself to come out ahead. But those voices were minorities in the wilderness, trying to point something out. To be blunt, it was too profitable for Washington, and it was too profitable for corporate America to care. Post-COVID, a lot more attention began to be paid to this issue because of how hard it was to get critical supplies. It's one thing for the military to say, "Oh, we're almost sole sourced to rare earth metals that we need." We're almost sole sourced from China for rare earths that we need to make missiles to point at China, and the politicians sort of don't care. Or didn't care all that much. But when it came time for the politicians to have to put on a mask, and they couldn't find a mask because it was sole sourced to China, and China needed all the masks, the politicians, enlightened self-interest, started to care. And so it's this, I would date this COVID, the March 2020 timeframe, I think is a really, as tragic as it was, a really important transitional point an awakening amongst the US political and corporate class to the existence of this dilemma, which is, if the U.S., as the system is structured, the U.S. has one role in this, is to supply dollars to the world. And the world then makes stuff for the U.S. and sends stuff back. And that leads to a couple of very clear winners and a couple of very clear losers in the United States. And the winners in the United States have been Washington, D.C., certain interests, Wall Street, and broadly speaking, financial assets, the fire insurance, real estate sector broadly, as these deficits are recycled, sterilized in U.S. financial assets. Abroad, the winner has been China. So it's ironic as we continue to sort of, get more tense with China. Washington, a big stretch of Washington and Wall Street are very closely aligned with Chinese interests. On the other side, in the U.S., the middle and working classes have the real purchasing power, their real standards of living have been the losers in this deal. And so if we want this, unless we stop basically the structure of the dollar reserve status as it's been structured, centered around the Eurodollar system, right, where we supply dollars to the world effectively, then what China does is they borrow dollars. They run dollar surpluses, number one. And we just came in that they just ran their biggest surplus ever last year, $676 billion. So that's 676 billion fresh dollars. When people say, oh, they're going to run out of dollars, they're not going to run out of dollars. Not when you're bringing in 700 billion a year. They have dollars coming in from surpluses. They can also borrow dollars in the Eurodollar market abroad. They then take those dollars and they, instead of recycling them into treasuries to finance our government, which is almost, the vast majority of government spending is now on three things: entitlements for baby boomers, defense, which is largely pointing weapons at China, and interest expense, no small portion of which is to China. So China's looking at us going, this is silly. Why on God's earth would we own U.S. Treasury bonds? Let's buy ports around the world, which is what you're seeing in that chart. They are buying ports all over the world. They are buying U.S. equities. And so you see, when you see and hear increasing U.S. corporate deference to China, when you see it in terms of things like we've seen from the NBA, et cetera, what you should be hearing, what you should be seeing is China is increasingly increasing their ownership stakes, their importance in terms of their client base for these places. And listen, it's capitalism, baby, right? We all loved it on the way up. Well, whoever pays the piper calls the tune. And China's using the Eurodollar system to pay the piper, and they're increasingly calling the tune. And so it's one of these situations where unless you change the structure of the dollar system such that we settle in a neutral reserve asset again, right? Whether that's gold at a floating rate or Bitcoin at a floating rate, in all currencies, our job is to run deficits. And so we will send dollars to China. China will buy up stuff all over the world. And as I put, I think in that tweet thread, sort of the ridiculous cherry on top of this entire Sunday is that we have to pay for our military to defend China's supply chains while they bring the finite goods of the world back to China to get bigger and more economically competitive with us. And we're financing China's military buildup as well. So we're paying for our military, China's military, and for China to buy up the world's finite goods. And if at any point the dollar gets too strong because China made themselves too big to fail because they owe so many dollars, now the Fed steps in with more dollar liquidity. So they're basically, China's conducting an LBO of the world through the Eurodollar system, backstopped by the Fed and protected by the U.S. military, while they build up their own military at the same time. It's makes zero sense from a geostrategic position, but by the same token, there's still a lot of people in Washington that are dogmatic about this dollar system, and they simply can't. Again, when I talked before about this very binary picture, it's dollar system good, source of our power, and that's as far as the thought process goes. Nobody's thinking about some of these people aren't thinking about these more subtle secondary, tertiary effects and the longer term views. So again, here we have in the Eurodollar system a Gordian knot we have to cut if we want to compete with China. Forget about the long term now, in the near term, in the intermediate term, and in the long term.
All right. Thank you for giving such a great and highly articulate summation of what I think is a really complicated issue. But it's exactly one of the reasons why I wanted to bring you on here, was to put that on people's radar. Because to your point, I don't think a lot of people really understand the extent of how that all, how far that extends, and really just sort of how it operates in process. So you did a great job, I think, of helping folks understand that. So I loved how you sort of summarized it there. It's an LBO of the world at U.S. expense that basically benefits China. And hey, if you're China, why wouldn't you do this, right? I mean, it's understandable.
Nobody's a bigger fan of the dollar system than China, except for maybe a few people in Washington. Right.
Don't click away just yet, folks. In last month's conference, Luke also shared his predictions for which asset classes he thinks will perform best in the year ahead, given the macro themes that he talked about. To access those predictions right now for free, just go to wealthion.com/Gromen. But before you do, help support this channel in bringing you more top-notch financial content like this by hitting the like button and then clicking on the subscribe button below, as well as the little bell icon right next to it. Okay, now you can go to wealthion.com/Gromen to learn Luke's predictions. Thanks for watching.